Hi guys, welcome back. Welcome back to our episode, and totally different, so not totally different, but somewhat different subject we are going to talk about today. Every year, April. Unfortunately for this year, it's July, right? It's for some people it's stressful, and some people it's not stressful. You know, they're really looking forward to that time period. Why is that? Because April in every year is the tax filing season, right? And why people are stressed out, because we always encourage people to earn more money and all that. And when you earn money based on that income, you will have to pay taxes, right? So that's why some people are stressed out. And at the same time, some people are not stressful. Why is that? Even and those non-stressful people are also earning as much as the people who are stressful. So we are going to give you some strategies how to be non-stressful during those times, and especially if you're earning, if you're in the highest bracket of in terms of income generation, and how to use certain things, how some strategies that you can use um, to, uh, to be non-stressful, basically how to save money you're filing your taxes. And there are some strategies, all legal. You're just using the system to your advantage, and Venki is going to share some thoughts on that. And I think it's about time, Venkat. How about you start sharing those points?
Right, yeah. So there are, believe it or not, like there are so many, there are so many strategies, right? There are so many loopholes, but they are not really illegal or anything. We're just taking advantage. You can take advantage of several different laws out there.
And I want to add a real quick. This is something I learned from my expert area. Tax avoidance is okay. It's not illegal. Tax avoidance is all right. Tax evasion is criminal. So we are talking about avoiding avoiding this whole tax thing, tax filing thing, and not evasion. So we are good.
Right, exactly. Yeah, we never recommend anything that is
Yeah.
not illegal. But
Right.
these are the things that we have done it, and we actually took advantage of these laws. And there are more laws. We are pretty sure there are more that we are not taking advantage. But some of the ones that we are going to give you, those are the major ones
Right.
that you might be missing. Learning those things and adding that into your tax return, you might instead of putting the money in Uncle Sam's pocket, right, you will put everything in your pocket.
And these are
Who
the
would
points,
want that?
actually, these tax accountants, what differentiate between a good tax accountant versus a bad tax accountant, right? The good one knows all these strategies.
Right, it's like a combination. It's like a combination of different things. Like when you combine this law and this law, actually you can say more. That is what these the
Right.
CPAs out there, they should know about all these things.
Right.
So anyway, so let me start with this. I'm going to give you like maybe 10 or so different tips. So if you are not doing the 401k, right, 401k contribution,
Mm.
so there are like 19,000. So it varies every year. I'm not going to give you the exact figure, but 401k contribution, you need to remember to put your, before the pay. It's before the pay, right? So before the tax, you put into the 401k. It's a pre-tax. That way, your taxable income goes down, right?
Okay.
And the 401k is
Yes.
being invested onto bonds and stocks and mutual funds and everything, right? It's still growing.
Right.
So you can put up to 19,000 every year. That's a good thing. So take advantage of that.
Yep.
And another one is the just in the same same scale, right? Like you can use the you can put IRA, traditional IRA, something called traditional IRA, and retirement account, right? That you can contribute also. And on other than that is the Roth IRA you can do. Those are the some of the retirement accounts, the 401k. You can contribute it and take the benefits at the end of your retirement. You don't need to pay to the as a tax. So once you pay as a tax back to the government, you lose everything, right? But this is your money, it's going to be still there. And the next one is like a rental properties. Like if you buy rental properties, investment properties, right, we talked about this lot.
Yeah.
And you, whatever the expenses you're doing in that rental property, whatever the interest you're paying on that mortgage, property tax, everything can be climbed into your tax return.
Right, right, right.
So that's
And I think that's a standard thing, isn't that right? Because I remember sending all that information to the tax preparer. So that's a standard strategy, is that right? People
right.
are usually taking advantage of it, is that right?
Yeah, like if you're doing your tax yourself, yeah, just some people actually don't take advantage of those things.
Okay, so if you're filing, yeah, okay, I see what you're saying.
Right. So it could be like around $10,000.
Yeah,
You're missing $10,000.
yeah,
So that's a good thing. Like another one is like you're having a business, side business, right? You have a main job, you're making good money there, but because you're making good money, you're paying more tax, right? Let's say
right,
you're paying 30% tax, you're making 100,000, you're paying $30,000 as a tax. And that's actually, if you have a side business and it's making money, but you're spending a lot of money in the beginning at least, and you're buying a car, and there is something called 179 deduction. You should look into the 179. I'm not going to go into detail, but there's lots of deduction in 179. It's called depreciation. So if you buy a car in the first year, you can actually claim a whole lot of money in the first year. Once you miss the first year, if you buy a car for your business, so that's another deduction you can get, and it's going to like almost several $1,000s in there you can climb. That's
so
how
even
people.
sorry, go ahead.
Yeah, no. That's how
So I
people
was going to ask you, so
actually.
if you so let's say I started up a business in 2018, right? Which I did.
Yeah.
And if I wanna, if actually 2019, last year. So if I didn't buy a vehicle for that business, so if I want to buy something next year, let's say this
Yeah,
year,
you can buy anytime as long as you use that car for 100% for the business.
business,
Just buy
okay.
it, and you can probably, like, some people actually climb the whole thing and
Mm,
it as a free, right? Free car, because you otherwise, you like, if you're I income owner, right? And then you want to buy, you have to do all these things to reduce your taxes. These are like right ways to do it. You buy, like, say, $50,000 car, Tesla, right? You can climb 20,000 on your tax on that first year,
mhm.
and then every year you can climb like 6,000, 7,000.
Okay, at least even after first year, you still can claim. That's my question.
Right, right. Yeah, you can still climb, but it'll be less.
Less, okay.
And consult with a good CPA,
Mm.
because otherwise, we like, this is just, we are giving you some pointers, right? Not really a tax advice. This is not for tax
Right,
advice or
right, right,
anything.
right.
Just giving you pointers so you can go and take advantage of these. And another one is mileage. Like, you bought a car and you're using that for business purposes. You're going and meeting clients, right? You're going around and buying stuff for your business.
Mm.
Mileage, every mileage, like 58 cents, I think, right now.
Yeah,
Every year it goes up.
yeah.
So
Per
just,
mile, it's 58 cents now, I think. Yeah.
yeah, just take advantage of that. Another one is kind of funny, like, have more babies, right? This is kind of like, every baby you have is $3,000, I think, right now. And you can climb extra, the daycare expenses, all the other nanny expenses, anything else that you are,
Correct.
dependent expenses, whole lot you can climb.
Yeah.
And I think we talked about, yeah, we talked in the traditional IRA, 401k, the same level, like HSA contribution. That is the, when you have a high deductible insurance, medical insurance, you can have a HSA, health savings account. Nobody takes advantage. Not many takes advantage of that, right? What happened? Like, you can put 3,500 every year pre-tax money. Think
Pre-tax.
about,
Right.
that's almost, if you're paying 30%, right?
800. Yeah.
So you're getting a whole lot of money, free money there, and
So
then it
so when
grows.
you do it pre-tax, so the point being, when you do pre-tax, then your taxable income becomes low, right? That's
Yeah. Your taxable income. The main goal is to make it like, you are making 100,000, you're paying 30% tax, right? On the, if because you're 100,000, you're paying 30%, 30,000. And then if you add all these up, let's say, right? it comes to only 60,000,
Right.
right? And then you will be only paying maybe $6,000,
Right.
right? It's only 10%. So you reduce like $24,000 reduced. You're just doing numbers, adding numbers,
Yeah.
and subtracting, but you're saving 24,000 right there,
Yeah.
right? It's
Yeah. That's a lot of money.
4 months salary.
That's, yeah. 2000 a month, man. That's good.
Right. And yeah, other one is the yeah, I think we covered most of it. Real estate, it's kind of a major ones. There are more ways to climb your taxes there. Reduce your taxes in real estate alone. If you want to categorize this, right, real estate, retirement investment, and then your what is the other one? Your business, right? So if these three things, if you can take advantage of on the side, right?
Right.
Have a small business, have some real estate in there, investment, have like contributions to all these traditional IRA, 401k, HSA, all these combined, you would be probably saving 30%, 40% more, on the tax. Like if you are paying $10,000, you would save $6,000-$7,000 in there.
Yeah. Oh, wow. When you put it that way, that sounds like a lot of money, and you can really take advantage if you play it right. And nothing is illegal. These are strategies. Like I said, it's tax avoidance is okay. That's acceptable as long as it's not tax evasion. Thank you so much, Venkat, for sharing that. And it sounds like there's a this is just we are just touching the surface of these points. And if you have we might be doing detailed episodes on each of these things. And if you cannot wait until that time, please feel free to drop a line, ask questions. Expert is here. Take advantage. All these strategies, all these advice comes to you at no cost. So please make sure you take the advantage by asking questions, listening to this from the start to the end. Unless you don't have anything else, Venkat, I think it's goodbye from us for now.
Right. Yeah. Thank you guys for
Thank
watching,
you.
and come back and visit us.
Yeah.